looking at my list, because I go from a dumpster list all the way to a watch list, everything's filing up on the dumpster list, and there's hardly anything moving through the system because the markets are going down, going down, going down. That doesn't mean that all stocks are down. There are, tranches of stocks where someone gives them an upgrade, or they might have a good earnings report and you'll see it bounce up or not. But the reality of what I look at, it's just they're building for good setups. We just haven't turned the corner yet on these setups. Let's just take a
Hmm.
look at the S&P. And Mike, do you have any questions? You want to talk about anything? Just jump right in, okay?
All right.
Because I got a little agenda. I'm going to leave the S&P up, but I want to go over what I call market conditions that are causing what we're seeing in the S&P over the last 2 weeks. And this is just my thoughts. And the first thing is China. Okay. In China, new bank loans within China itself plunged in July. So they're not creating any more loans. And as you know, in a debt-based economy, that's how money's created and moved, is by loans. And even in the United States, we see that. Then they had interest rate cuts to try to stimulate the economy this week, and that doesn't seem to be doing much to move the loans or the economy. The Chinese trust company, I don't even know how to say this, Zhongrong International, missed some payments, bond payments, and then they're trying to renegotiate the structure of their loan. So that's not good from a point of view of the property. And again, then Evergreen yesterday filed for bankruptcy in the United States. And then lastly, in China, new home prices in 70 of their top cities dropped for a second month in a row, which doesn't surprise me with what's going on in their property. From what I understand in China, when you buy a house, and most people's savings are in real estate, from what I understand, their retirements, their savings, not stocks, and they will buy a couple units or homes in these high rises. And the moment they sign the contract, the high rise isn't even started, they start making the payments. That's my understanding. So
Hmm.
it doesn't surprise me that prices are going down and that payments are stopping in China. Another thing that happened, this was a busy week. Fitch warned that banks have a risk of further downgrades, and that could include larger banks like the JP Morgan Chase and Bank of America. So we're still seeing issues with when the Fed raises rates. But I watched the fixed income market because the rates are higher. And it used to be, a month or a couple of months ago, I could get a nice CD that would compare or be better than the Treasury bills. And now the Treasury bills are points higher than any CD you can get for the comparable amount of time, 30 days, 2 months, 3 months. And so people are buying Treasuries and they're not buying CDs as much. And so these banks are they don't have as much cash available in the banks. And you can see that by when they go to the, what do they call it, the borrowing window or whatever. And you can look
Reverse
and see,
repo window.
yeah, and you can see that each week that seems to be going up for the number of banks going and getting some help. So we'll have to watch the banking industry. Retail sales were, supposed to be interesting again, and the retail sales went up 7% month over month in July. It's the fourth consecutive rise in retail sales. Now, the interesting thing that they don't really talk about is the retail sales report is not adjusted for inflation. So sales could go up because, in my opinion, inflation's up, so everything costs more. So they might be buying the same or buying less, people and consumers, but the price could be higher, and it just looks like retail sales are up. Then you break it down and you see what are people mostly buying. Well, they're buying food and basics. They're not going out and buying the discretionaries as much as they used to. So with retail sales up, the economy sees that, the market and the economists, the consumer spending remains strong. Now, whether it is or not, I don't know. I mean, I just know in our situation that our food prices, Jan does all the grocery shopping, have been up 30% year over year, and they haven't gone down, because we buy the same thing almost, every week. So that hasn't gone down for me. But, if you look at, our spending and has gone up, but we haven't got any more for it. So again, when retail sales go up, the market seems to think that That's going to support keeping interest rates higher for longer. And everyone's fixated on the Fed and what they're going to do. And quite frankly, for me personally, I'm tired of talking about the Fed and if they're going to go up a quarter, down a quarter, stay or not. It doesn't really matter to me. But it seems to be the thing that the market likes to do. Target came out and it lowered its first year sales and profit expectations, and their total revenue fell 4.9%, even though their earnings went up. And this is the first decline in 6 years. Target doesn't have quite the food retail that like a Walmart has. And Walmart came out, and you could see, Walmart did well in the food area and in the non-discretionary areas. And so again, retail kind of giving us mixed signals. Mortgage applications, and you look at the housing industry, the mortgage applications dropped 0.8% in the week ending August 11th. So that's the fourth consecutive decline. The 30-year mortgage rate is now over 7%. A year ago, it was 5.13%. So it's getting it's going to be tougher to get mortgages, and monthly payments is what people are looking at. And this is a direct reflection on the Treasury yields. And if you look at the Treasuries, the 10-year rose above the 4.25 level, which is the sacred level, supposedly, of the gurus. And that's about where it was in 2007. So as the Treasury yields rise, stocks and technical stocks tend to go down because of the cost of money gets higher to borrow. And then last but not least, we're looking at unemployment. And that came out. Claims for unemployment fell 11,000 to 239,000. Again, indicating resiliency in the labor market. And again, I'm not deep into how they calculate unemployment and all that, but I've heard that people who have 2 or 3 jobs might be counted 2 or 3 times. But again, it is what it is for what it's worth. So if we look at what's happened in the market here, you can see on the SPX, we're just cutting through these major 4,500, 4,450 marks. We see we're underneath. Here's your August first date right here. We went under the 9-day, and we've been under the 9-day ever since. We're now just following the lower Bollinger Band down. We're cruising down on the 9. Basically, the MACD started crossing over back on August 1st. Oh, did you say something? Our RSI is down and our stochastics down. We see a little bit of a bounce here at the 4350 level, came back up, and it's just finding some resistance here on the lower Bollinger Band. So I don't see I don't see a reversal yet, with the MACD still heading down, the RSI going down, and we'll just have to see how it goes. We go over to the NASDAQ. NASDAQ looks about the same. Here's August 1st right here. You can go down and see it's about the same time the MACD crossed over and been going down since. About the same time we see the RSI drop down. You see the stochastic fell down below the percent D line. Again, following around the lower Bollinger Band. We're underneath the 50 in all 3 indices. That's a huge step from a technical point of view, because now this becomes resistance. We're underneath the 9. 9 is still following, at a nice slope down. That will also be a point of resistance. And until we see something turn, I expect probably the same thing, that we're not going to be turning around anytime soon. And if we do, we have plenty of resistance above us. The Dow Jones was the last one to fall to the 50. And that just fell yesterday underneath the 50. You can see today we're up 58 points right now, but it's hitting right here on the lower Bollinger Band again. And again, the MACD crossed over about 8.1. It's the same as the rest of the markets. Just took a little longer to get below the 50-day. We're cruising in slowly, maybe not so slowly on the 200. If we start bouncing out of the 200, we'll pretty much be really bearish in these markets. So we didn't do much in swing trading this week because there wasn't really much to swing trade. And I'm not going to give you stocks just for the sake of doing it. I can sit on my hands, and as a swing trader, you need to sit on your hands sometimes and save your save your powder for when the mark or the charts tell you to get back in. We did get into one, and let me get over to that and share the screen. And it was really weak. You know, it was Boston Scientific, and we got in on the 17th at 51.03. We're now at 50.23. We got out yesterday. I said in the morning update that we were up a little since we put it on the list, and I would put a sell limit above cost basis. So I decided to put it in about $20 above, and that's what we got. It was 0.39%. We were lucky to get it. This is not something I really would wanted to do, but it came up on the charts. And so if it's on the charts, I'll put it on here, and we'll see how it plays out. But that just because the charts say you still have to manage your positions and your risk. And so I'll take $20 any day over losing $20. And now you can see the stock is down $50.23. So we're down we're down exactly $1 off of what we bought it from or sold it at yesterday. And that's, I don't see anything else right now that interests me, to get into, especially on a Friday. Let's go look at the NDX chart. And I'll show you how this played out. I'm on NDX chart. Okay, here we go. Oh, not NDX. What am I doing? Okay. BSX. Sorry, guys. So you can see we got into BSX back in this area right here at this level, 51.203, whatever that is. Popped up, got above our Bollinger Band, stayed above our Bollinger Band. Then here yesterday, I said, put in a limit sell above your resistance, which was the 9, which we did. Caught a $20 gain, and you can see today we've dropped down and we're just a little above the lower Bollinger Band now. Come down, look at the MACD is now even. Well, just a little bit up, but even and flat. The RSI's been crushed down to 36, and we got to roll over in the stochastic. So even the good ones are hard to come by. You can see our trend is down, and even our trend in the 9 is down. So we're lucky to get out of this one. Wasn't anything I really wanted to put up, but like I said, the charts were showing it had a potential, so we put it on and we managed it for a $20 gain, which is not great, but it's better than the alternative. So with that, we don't have that much to talk about, but I'm going to go back and just look at people are in. I'm watching the Discord, and people are in different stocks, and they're wondering, when to get out, when to get in. And I'm just going to go back and look at some of these stocks, and one that seems to be big, and I'm going to kind of show how I would have swing traded it and got out, and why I would get out. So this is at SMCI. This is a super microcomputer, okay? And we've looked at this before, and we talked about it on Monday in a video. But you can see it's been crazy up, since the AI craze has come on. But lately, it's done like everything else, and we've seen a little bit of a dumpster fire happen here. So when I was looking at this chart, when I'm looking at when would I possibly, oops, hold on. Gotta go to the 6 months, sorry. So when would I possibly get in or out of this chart? Let me move it over a little bit. Just using our trading system. So if we were swing trading SMCI, and I didn't do it, and it's easy to go back, but I just wanted to show you following the rules, kind of would help you get in and out of these, even if you're kind of an investor kind of guy. I'm going to take these off so we just don't. There we go. So when I look at it, right here, we had earnings, so we would have not been in there before earnings. But the day after earnings, we had this nice bounce, a full candle close above the 9. We're above the 200. You can see that the MACD crossed over positively at this point, made an RSI jump up, made a stochastic jump up. So at this point, this is where based on the trading rules and guidelines I have, you would have gotten in, and you would have gotten in at 133.95 right here. And you would ride this up. It never did get a full candle close below the 9. Ride it up, didn't get a close here, all the way to this point where it closed right at or below the 9, and where you would have probably got out here the next day. And that was at 243.92. So at this point, your gain was $109.97 a share from here to here. So now you're out. So you missed this little ride down. And then you see you're above, you come up and you're above the 9 again. But why wouldn't I have gotten into this at this point? Because I don't have confirmation on the MACD. We're still below on the MACD. Okay, we have a positive showing in the stochastic, which kind of gives us an indication the MACD is going to go up. But if you're going to really want confirmation, this is the point you would do it. So you wait, and at this point right here, you can see right here. Oops, sorry, went over. Where am I? The MACD starts to cross over, and at this point you could get back in. You're over the 9, you're over the 50. You got a MACD crossover. You're still good on the RSI, and you ride this all the way up. You never did get a full candle close below the 9. Oh, I guess that's still touched. Okay, so you want to be a purist and that touches, and you're not full candle close below. You could have got out at this point, which would have been 321.21. You would have got in at 250.53. But if we went up here and we said we're getting out before earnings, and this little guy should be there. You get out before earnings, and that's at 353.29. You got in at 250.53 down here. Yep. So I mean that gives you another nice profit. And then from that point, earnings came out, and then you dump down, and you're below everything. And you still wouldn't be into this position yet. You're still looking at the MACD, which was positive here, and now it's negative, starting to roll a little bit. It's still not enough to get you back in. So people who stayed in, they might have wrote it up or bought it up here, and don't watch charts. They might be long-term investors, but now they're down, and now we're going to lose some opportunity cost. I don't know when this will get back up to this level or if it even will, and that's why we swing trade. Let's go look at one more, and I'll just go to Apple. And I didn't swing trade Apple either. I don't really do these that much, but had we done, just looking back, here in May, here we closed above basically the 9-day right here, but again, we go down and we don't have confirmation that we closed on the MACD above the MACD. The next day, we still are below on the MACD. And then on this day here, the MACD finally crossed over the signal line, and that's where you probably would have gotten in if you're following the trading plan. You're above the 9, you're above the 50, they're trending up. You're above the 200, you got a MACD that's now crossed over, you got an RSI above 50, you got a nice stochastic going. You ride this thing above the 9 until you get one candle close. So we got in down here on Apple, 177.25. We sold at 187.14. Okay, so with $10 or whatever on that. And we didn't get back in. You see that we're above the 9 over here, but let's just say right here, we go down, we're still below on the MACD, below on the MACD, below on the MACD. We never did cross over the MACD over the signal line at all. So we would not have gotten back in this trade. And then had we been in there, we would have got out before earnings, and you see what happened. So we would still, as swing traders, based on the trading plan that I used, not have been back in Apple at this point. You can see right here, right before earnings, that's when the MACD crossed below the signal line. You can see everything fell apart right at earnings. So again, there's power in this when you might have bought in up here and now you're down here. That's a lost opportunity cost, and you're going to either have to get out or suffer more downturn. And then we're having a little bit of an update today, but we're still below the 9. We're still heading down in a trend. We're starting to roll a little bit. But again, you could have saved yourself this much of pain just by watching charts and by watching numbers. The other thing I'm going to look at, we have horizon lists. So the and as expected, they didn't do very well uh, this week because the market all went down. Let me find those. And again, these aren't stocks. There we go. There we go. So these aren't on the planet. This is under 200 list. These are very volatile and risky. When markets go down, and we're in a downtrend market, you're surprised to see some up. Uh, this one here, Mosaic, it got downgraded. Okay, so once it got downgraded, the MACD and stochastic are in the red. Here we had Merck, price actions hitting resistance at the 50, more downside risk than reward. So, if you were in that, you would get out, but everything is, below the 50, or below the RSI 50, below the 9. So everything is just pretty much crushed. We did put Bristol Myers on the other day because the chart said it looked good. You still have support at the 9, resistance to 50. We're up 67 cents per share. But for the most part, when you have these down trending 2 weeks in a row, you just got to be careful on these and manage it. And, again, I always put down here, current market conditions are not conducive for successful swing trading. It's important to remember you don't need to be in the market every day to be successful. Some of these move in, some of these move out, but we really didn't have much movement between, the horizon, the under 200, the dumpster, or the watch list this week. Everything was pretty much depressed. If we go over and look at the horizon, didn't fare much better. We had a couple here. Beatrice and Gen Digital are up. Again, would have taken profits at resistance if I were up in here. Here's profit at resistance. If we would have taken resistance profit at that time when that hit the resistance, we would have made about 54 cents a share. Now we're up 26, but again, if you were trading these, you're going to trade them based on the trading guidelines. So you wouldn't even get into most of these because they wouldn't meet the guidelines. But if they did, you trade them accordingly and you watch your support resistance. Let's go look at one that could be on the horizons list this week. And you guys have any questions?
I think the theme of the week is markets are going down, and unless you're really good at catching knives, catching falling knives, it's one of those to be cautious to be in at this point.
Yeah,
it's actually good.
And
you should take in your vacation this week, Mark.
Well, last week was good, and this week was good too. I mean, here's one that could possibly go on our horizons list, and you'll find these guys, but you still got to be careful. Now this is AON, and you can see it's been trading above the 9-day. We're trading above the 200, kind of getting a little resistance here on the upper Bollinger Band. But if we come down here, we have a crossover right yesterday of the MACD. We're above the 9. It was a red day, but again today we're bouncing off the 9 and we moved up above the Bollinger Band, seeing a little bit of a bump on the R side. We're not quite at the 50, and we're seeing a nice stochastic. So I mean, if you have to trade and you have to do something, this is one that if it can close above and you keep the MACD, this is one you could probably work on. You've got a little bit of room to the 50 up here, which would be your resistance level. In fact, let me go. Let me put these in just to make sure they don't give it to me. All right. Yeah, here we go. So yeah, you've got basically here's your intermediate resistance or support level, which is below your support level at the 9. Here's where you're going to find some sells about 330.69. So right here, you're kind of right between where you might want to make money or lose money if you bought right here. Again, it's where you enter and your risk management. I would wait on Monday and see what this thing does. If it pops down and can continue to use the 9, you might be able to get a buy in there. Again, it's very risky, not financial advice, but if you have to, this is one that's kind of meeting the criteria. We're seeing some issues. I would go check the news and check the earnings and dividends and make sure here's dividends. It's probably not that. Here's earnings, but just see what's going on. But if you had to trade something, I'm not going to do it. If I see it Saturday and it's looking like this, I'll probably put it on one of the lists because it meets the criteria. But here's one, in a down market. If we look at we have a dumpster list too that is huge right now. I can't even show it to you. But here's one that, is starting to look like it could come on the under 200 list. Okay, we've had this huge dumpster fire now underneath the 9. And so today, you see, Kimberly Clark is now trading above the 9. And we're seeing a MACD crossover shortly. We're still not quite at 50 at the RSI. And we're seeing a little bit of a bump on the stochastic. So I'll be watching this one, and this one would be, if we can get these going a little bit better, a candidate for being on the under 200 list next week. These are the kind of things I like to watch because these give you more opportunity to the upside, even though it's under the 200. That's why we have the under the 200 list. It's a little more risky, like you saw this week. Markets go down. This can sink this really quick. But you got to manage your portfolio. If you do this, it's not something that's automatic, and you've got to put in your own risk tolerance, what you want to win, how high you want to go, and how high or how low you want to lose. Use your support and resistance lines as your guidelines, and it'll help you become a better trader. But here's one that'll probably be on. We'll watch it next week. And then we got one on the under 200 list. Let me see. There's just not that many, and that's why we didn't have many. Oops, that's not it. Zebra. Oops. All right. Let me get this one straightened out for us here a little bit. So this one, you see, has bounced above its 9 and it's moving up, and now it's above basically its intermediate term support level. It's also up above the 20 today. Okay, and the reason that it hasn't been on the under 200 list is because we've been waiting for the MACD to cross over, and now you see that we're crossing over. Let's move this out a little bit on the short term and see where that gives us. Yeah, that just tightened it up. So there's not much room until you're going to hit some sells on the short term, about 277. We're sitting at 272 right now. But again, it made it above the 9. It's under the 200. And we're getting a cross over the MACD. We're almost at the 50 level of the RSI. I mean, so there are some little gems, but I don't, for the risk on some of these, on all of these, the reward's not there for me. But for people with a higher risk tolerance, it's something you can probably do. That's about what I had for this week because we really didn't have much. I wanted to go and show you the indices. I wanted to show you, the SMCI and Apple and how you could have avoided the downtrend, using swing trading. But again, you got to follow a trading plan and get your emotions out of it. And if you can do that, your success possibility, potential will move up. Not that every trade is a good trade. We've shown it on our watch list that not every trade works. But if a majority of your trades can bring in more on the upside than the losses you have, you can do pretty well. And again, we're hitting bunts, singles, and doubles. We're not trying for the home runs on any of these. But if you look at all the stocks and I was looking at the bus 13 and 12s. They all look pretty sad right now, and they're all following the way of the markets, and they're trading under the 9s, and so buy and hold in a market like this, you got to really have the fortitude to stick with it, and again, when I look at the market conditions and I try to draw them out every week, what the markets are. And I try to look at the good and the bad, and I don't see the good overtaking the bad news right now. And when you look at the news with mortgages and treasury rates and retail sales and the Fed and next week we got what is it in Jackson Hole. Okay, everyone's going to wait on that, and I really couldn't give a rip what they do, because I can sit here and look at the chart, and the chart's going to say, yeah, don't get into this yet, and we'll know when to get into it, and that's when you get in. But right now, it's risk off for a swing trader, unless you want to, short, which you can do, but it's something that I don't recommend because it's you can really get in trouble on the short side really quick. So that's why I don't do it on this channel. So that's what I
Mhm.
got. Has anyone else got anything? Mike, you got anything? Or Barbara? I see Barbara's here.
I think something I thought about this week was I think Mark, I am pretty compulsive about this, and it
Just
can
a little
be
bit.
just a little bit, and it
Yeah.
can actually work against me. And what I have sort of started doing was when I know I shouldn't be in this market, and I still have that compulsive kind of personality to want to be doing something, actually flipping over to my paper trading on because I use TD Ameritrade. I have a dummy account basically. I can go in there and fulfill different. I can take more risk and I can experiment a little bit and still not lose my shirt, in a sense. So I think in a market like this, where I think a lot of people want to be in this market, and they have that inner feeling to do so. Sometimes just if you can resist it and just stay on the sidelines, great. But if you have that desire to be doing something, just flipping over to your paper trade account on your, brokerage, platform and go that route.
Yeah.
I did that yesterday. I bought a put, sold a call kind of situation. And if I had actually put that, if it was actually real money, I would have done super well. But it was something I hadn't really ever tried. And in the circumstances it was, I was like, this is a better place to do it than actual with real money. So
And that's a good point because everyone should practice with a paper trade account and get used to it because a lot of when, you have a trading plan, there's still a certain amount of feeling to markets and how, I've been watching X stock for all my life, and every time it seems to do this, it goes up or down, and that does happen, and you can catch those things that you don't know unless you've actually watched it for a while. So
yeah,
yeah, and that's why we have a paper trade account, just to show, what would happen, win or lose. Again, I trade it like I trade myself, which is very conservative. Um, and I don't like to lose money. So if I can make 20 and not lose 20, I'm going to do it because I've been on the other side where I've let them go down. I've done every mistake that everybody's done. I hope it's coming back. I hope it's coming back. And 3 years later, it doesn't come back. I'm like, well, crap. I just lost 3 years of opportunity cost, and what
right,
good did that do me? 3 years of my ability for that to be in a treasury bill. Okay. And that's kind of what I'm doing now to kind of get rid of that. I don't have to be in the market because I hate to lose money. But,
hmm,
I roll over treasury bills, and every Tuesdays and Thursdays, the treasuries come out. So right now, every Tuesday and Thursday of the week, I've got something rolling over. So it's, I can either put it back in a treasury bill, or if the market is turning, I can put it into the market if I want. But right now, I'm just rolling everything back into treasuries. And if you can get, 5.3 to 5.5% on a 1 month treasury bill, why not stick it there, watch and wait and be patient? You're still making, even though it's annualized, you're still making 5% on a month, even though it's, a twelfth of it. Um, but then again, I don't feel so bad about not being in the market. Actually
right.
feel better when I look at the markets go down, and people who don't get out, and then you can watch it, in any Discord that you might follow, that people are like, well, when do I buy back in? I think it's going to be here, or I think it's going to be there. Well, with swing trade, you don't think, you just watch. And when you get to it, like we just saw, super microcomputer and Apple, you're out until you're back in, and the trend tells you to get back in. I don't have to guess, and I'm not going to.
Hmm.
I'm not going to say I'm going to get into Apple at X, because that's a good price. Well, I don't know if it's a good price or not because the church didn't tell me it's a good price. I wait
Yeah.
for that, and that's the beauty of this. But the hard part is, Trent, like you said, people want to be in the game. They don't want to be sitting on the bench. But I remember sometimes when I was playing sports, it was nice sitting on the bench for a while, especially when you were losing, you know.
Yeah. Well, I think the other thing is when you get on a losing streak is
What's
just
the best price for
walk
Tesla?
walking away. Is just saying I'm done. I'm going to step out for a week, reassess, figure out what I did wrong, what I've been doing wrong, and then go back at it with a better plan. I know that's actually what I did this week. I stepped out because I was thinking this thing's going to bounce, it's going to bounce, and it worked against me. And I finally just said, I'm done. I'm going
Yeah,
to step out.
you can't fight it. You can't fight it. You've got to be patient. Let
Yeah,
the market come to you and don't go chasing it, and then it
yeah,
will come back to you. And I'm watching, and we're going to have a whole list of stocks if this thing turns that we're going to have more than we know what to do with,
yeah,
But right now, on a downtrend, you just sit and
yeah.
wait. Put your money in a treasury, let it sit, don't lose money, you know.
Right. Yeah.
Barbara,
So
did you have a
Barbara,
question? I saw you.
she wrote on there, what's a good price for Tesla? I actually wrote about this morning
I
and
think you
I
did.
posted on the Premium Plus. I've got a target between 164 and 198, something in that range. Um, it's it's just going down. And it's if you just follow that 921 kind of moving average, it's just telling you don't touch it. It is, and along with the S&P, it's doing the same thing. And I just like, to me, that there's nothing holding it right now. And especially with, they're heavily dependent on China. You're hearing the news come out of China. I think just we're in this point where markets in general are starting to move south, and Tesla's just a part of it. It's a high beta, high volume, high volatility, highly traded option stock. And I would just not try to catch this knife right now.
I would
So,
wait. I mean, the chart here for me as a swing trader, I mean, I would have gotten out right here because it's before earnings. And then we went right down below the 9, and we haven't been above the 9 cents. And right
yeah,
about here, here's your earnings. That's like the last time you were even close to being, above the MACD, above the signal line. And you're just watching it, and it just keeps, going down until I see the MACD come back and cross, and I get some momentum out of the RSI, which is at 27 right now. This thing, for me, I wouldn't even touch it, like you said. It's, I need to see this turnaround, you know, and then come back. And will it do it? Probably.
oh
Stocks do
yeah,
that.
oh
But right
yeah,
now, it's not the time to be in. Now, if you wanted to short it, you could make money shorting it if that's your game.
hmm
That's something I really do. I do it once in a while, but you know, uh, I just wait for it to come back. And let's go look. Let's just look at 2 years and take a step back here on Tesla if it's sinking. Okay, so you can see, we were way up over. When was this? This was 2021 in November.
yeah.
And
I mean,
now
you can,
here's earnings. Boom. Look at there. Here's earnings. Boom. I'm just trying to find all the earnings if I can. Yeah, earnings down. Earnings
yeah.
down. I mean, so this is not a good look.
Well, if you
It,
even if you drew a trend line from what to the left of the screen all the way across the tops, it's
yeah,
just trending downward.
yeah,
You get some bumps and you can trade it, but like right now, it's rolled over.
yeah.
So, but I
But
think that's just an example of everything since May. The
you know,
big the what Magnificent Seven, is that what it is?
yeah, yeah,
They're everybody's rolling over right now, and I think that's where, like, using the swing trading tools that Mark's teaching can really come into play, and especially just stepping out into a bigger picture, like on a 3-year basis, and looking at a daily or even a weekly chart. You're going to see the trend and where it's going, and this
yeah.
trend it's been going on for a while now.
Well, and
So
here's Microsoft. I mean, it's just trading between the 9 and the Bollinger Band, and it's still, you look at the MACD. This is like an airliner just going toward the ground. All these Um, and here's your 200. And, if we get below the 200, that's going to be not good,
Mhm.
But what else do we have? Netflix. What is Netflix's symbol? NF.
Billion.
LX, NFLX,
Yeah.
same
So
similar
Netflix has kind
situation.
of just started to come down, but it's been under its, 50
Mhm.
for a while. But again, you're seeing the same thing. Look at this MACD. Here's where the MACD crossed. Right. Earnings. Boom. Again. We talked at length about earnings and how earnings is a market condition that we know is going to happen in the future. We know the date it's going to happen. What we don't know is what the stock price is going to do. Now you'll get some earnings and the stock prices shoots up and you'll say, gosh, I got out yesterday. But a majority of my experience, this is what happens after earnings. And I would rather be out here than be down here. And that's a swing trading mentality. That's a market mentality, a technical analysis mentality. And you follow a trading plan. And the majority of time for me, it works out. Sometimes it doesn't, and it just skyrockets, and you're like, oh, I missed that. But you got to be able to say, I said, you got to be able to laugh at yourself, and say, okay, hey, I made 7% instead of 14%, okay, in whatever amount of days. I'm good with that,
Yeah.
And if it goes the other way and you're down, you're like, okay, I set a limit at 2 or 3 or 4% and it hit and I'm down 4%. Okay, that's part of my trading plan. That's what I'm going to do. Okay, I'll catch it on the next one, and that's how you got to get that into your head.
One of the ones, NVIDIA is the one I would be very, very cautious of. Next, they're coming out with earnings next week. I think it's on the 23rd.
Yep.
And when you look at this gap between that was developed after the last earnings from what was that, roughly 316, it gapped up to
Yeah, right
380. In my book, that is going to get filled. And it could have great earnings, but you look at the institutions who heavily betted on this back in May, they've made a ton of money. And since what, July 19th, they've been selling out of this thing. And I think earnings could be one of those where they could come out with great earnings, and yet the institutions be like, I'm taking my profits, I'm out. There,
Well, just look at the MACD here.
yeah, it's
That's
just
not happy. That's not happy just to see you.
no.
Yeah, and then we're seeing a rollover on the stochastic
Yeah.
down here, right? Yeah, it's
Yeah.
just, I think you're right on this one. I don't play in NVIDIA because it's too emotional, like Tesla.
Yeah.
People, it's almost religion, and it's hard to do charts and use technical analysis when on the outside you have, this religious aura. And I don't mean that I'm not trashing religion, this religious aura to people who fall in love with stocks, and I used to, and I
Yeah.
don't anymore. But you're right.
Well, so pull up INTEST, INTT.
Oh boy.
It's in if you look at the MACD, it's one of those I would just keep an eye on.
This would
Because
be on a dumpster list, yeah.
yeah, but if it busts over that 200, it could get really interesting. And
Yeah.
at $16 or so, that's a pretty, if I'm looking at this right, if it got over the 200, your next stop is what, 21 range? Well, you gotta go through the
You're right
50.
here.
Yeah.
It would be at 1876. Yeah.
Yeah. But it would be one just, put on the list of check every day kind of thing.
Yeah, that'll definitely be on the dumpster list. And if it gets
Yeah.
the way I look at it, Trent, and because we talked about this last week, if
Yeah.
it gets above this 9, I mean, it's so close to the 200. And then you've got some sell orders right here at 1748.
Yeah.
Okay, so you got to get through the 9, the 200, and then the sell order, and then you're up to the 20. Okay, but yeah, you're right. This is what we kind of look for. I like
Yeah.
this. You see on the MACD, our histogram is getting smaller, which means that the MACD is getting closer to the signal line. But, wait for confirmation. Make sure that crosses over, to give you a little more, uh, confidence in your trade, and watch
Yeah.
the momentum too, because momentum's pretty low at this point. But yeah, that's a good one to be watching, Trent.
Check out, Barbara was asking about Meta.
Okay.
That gap down today.
Oh yeah.
It's down like
So look at this
2.2%.
MACD. Yeah, look at this MACD.
Yeah.
That's just a free fall. That's that isn't a happiness to see you either. I mean, that's got a
Yeah.
ways to go.
If you pull it out to the weekly chart, there looks like there's support at 247, and then you start to see support at 205. That's been on a run for sure.
Yeah.
It's been on a strong run. It's time to take profits out of that if you're some of these institutional guys.
Yeah.
Yeah. This would
Yeah,
not
I
be
mean,
one.
you look right here. Here's your crossover, the MACD right
Yeah.
here.
Yeah.
That's when you get out. Boom.
Yeah.
And you can see right here, the histogram's negative. We've got an
They just said
RSI
on
time.
CNBC that only 44% of the stocks outperformed the Treasury this year.
What's that again? I'm sorry.
Can you hear me?
Yeah, I heard. I just didn't.
Oh,
You
I
said
just heard on CNBC that only 44% of the stocks were better than the Treasuries this year.
Yeah. Yep.
Well,
That's
and
bad.
you think about it,
That's
it's
not
all
very good.
no. Well, and I think that's what you're seeing here is everything's starting to roll over. The true, I focus a lot on option flow, and the negative, the strategies that institutions use with options, they go through a rebalancing process, but also just the amount of you buy a stock, you buy it from a market maker. Well, they hedge that position, and there is so much negative hedging right now that it's really just it's not good. Yeah, and
I
I
know,
think
I was
that's
up
what's starting to roll out.
$100,000. Now I'm down $9,000. This is ridiculous. Because the
Yeah.
stupid
Yeah.
FOMC all the time. Powell
It's the way.
Powell
If-
raising these interest rates. It's ridiculous.
It's nothing. That isn't it. It's options. It's the option world. I think what was the last week at one day, 50% of the SPY flows were all related to option on 0 days to expiration options. And you look at the amount of volume running through the CBOE and the option world right now. It's getting, this is where I
Well,
look at
today's
this and I go,
options expiration, right?
every day is an for SPY or the S&P 500.
yeah,
Every
that's
day
true.
is a
Yeah,
option expiration. But today's
I'm not-
OPEX day.
I'm not so sure that 0-day option thing has been a good thing. I mean, I know
No,
people make.
I tried that for a little bit on the SPY and stuff.
How'd that
Don't
work
make
out?
much. Don't make that much.
well, you can get some moves out of them. I had a trade last week where I was in it for 5 minutes, made 63%. But I also it
Yeah.
can also
I was doing like covered
dwindle
calls
on you pretty
SPY
quick
or
too.
something,
You made
That's-
60. You made
yeah.
63% because I was coming to see you, and you had to get out of it to come meet me.
That's
Otherwise-
exact. Well, it was more like, oh wow, I'm up this much right now. Mark would be like, get the hell out of this.
Yep. I would have made you buy some beers if you wouldn't have
Right.
got that one.
So, but yeah.
And
Anyhow,
I'm
I
really
think
mad at Tesla right now. I lost all that money because them. I should have got out before the earnings.
Kerry's
Well, that's.
using
I mean,
that.
that is. We talked about that. Was it last week? No, 2 weeks ago. Just about earnings and how earnings can crush you. As a
Yeah,
swing
because I
trader,
was up 100,000. Now I'm down $8,000. This is ridiculous.
Yeah.
I would keep what you got.
Yeah.
Yeah.
Yeah. It's
So.
And Palantir,
hardest
they
part of-
tanked. Oh God, they were horrible.
the hardest part of in this game is knowing when to sell, and then not only knowing when to sell, but actually selling. Okay,
Yeah,
because
trying to be a long-term investor, but it's too hard.
yeah, I think, if you look at opportunity costs and you look at what's happening, and I've had a discussion with Kerry on this, you know, we could be going to a downtime where we're down and it takes 3 to 12 to, took 26 years after the depression to get back to even. Okay. I don't have 26 years to get back to even. So I have to, yeah. So I'm gonna do what I do here and not lose money is my motto. And even if that means, taking smaller gains, but I've really tightened up my risk tolerance, especially in these markets that we're seeing today. They're just all crazy.
Yeah, because when they started doing the interest rate hikes, when was that? 22 or last year?
Mark.
Yeah, I lost $250,000 in my gains. I was pissed.
That's what
Yep.
that's where having a good plan is really
Yeah, I mean,
important.
having a trading plan or an investment plan, when to get in and get out, and that's
Yeah, because they
When
kept
Drew and I met.
putting interest rates up and up and up, and then everything just started tanking.
Well, yeah, we're fine. I mean, interest rates have gone up faster than I think in any time in history that they've shot these things up.
Yeah, how I don't understand how this is supposed to affect inflation, raising interest rates, getting people laid off, and this and that. I don't get this.
Well, it keeps people from spending, and so then
Yeah,
they
but
get.
the problem is we got such a deficit, this country, that it's costing more and more to pay for that.
Absolutely, and then
I
that's
think it's
part of the
stupid.
reason for the
I don't know. I
inflation.
think it's
Part of the
stupid.
reason for the inflation is government spending, and
I
and I
know.
just saw a report from the Federal Reserve yesterday that people's excess savings from the
Oh
pandemic should be
yeah, I saw
running
that
out.
too.
Yeah,
They're gone. A lot
yeah,
of them is higher credit card debt now than before.
that's true because people are spending more on their credit cards for food and necessities than they did before.
Right.
And
I mean, I'm finding I am on Social Security and IBM pension, and I'm finding that everything is costing more and more and more. I have to
yep,
cancel half this crap, like pest control. I have to cancel that. You know what I mean? I don't have money for that.
yeah, I mean that's what we're trying to do here is help people, know when to get in and out, and not that's going to happen every single time, but be more proactive and learn how to manage your own money based on your risk and your risk tolerance. Again, I'm kind of like you, Barbara. I don't want to lose any money. So if I have to
What
sit
do you
out,
think?
if I have
What
to
do you
sit
think?
out in a treasury bill for a while, I'll do it.
Yeah, I was gonna put mine in CDs. I was supposed to get money out of this annuity in a week or two. I'm gonna put some in some 5% CDs.
I would look at the treasury bills at 5.3 to
I've never
5.5%. And
bought those, so I'm kind of scared. Except for I bought bonds when I was working at Lockheed because it kind of made you.
yeah, but I think treasury bills are the safest thing out there. Plus, they're tax advantage. You don't pay state or local tax on your gains,
Oh,
just federal.
well, I've never bought those, so I don't know. I'm kind of
Yeah,
scared of bonds because I don't understand them that much.
let me see if I even have it. Let me see if I have the screen here because I watch them quite a bit. Let me see if I have them.
How do you even buy them? I don't even know how to do it.
Okay, hold on here. I have Fidelity.
Hey, Mark, I'm going to
Yep.
drop off.
Okay.
So I'll talk to you all a little later.
Okay.
And y'all have a good weekend.
Thanks, Trent. We'll talk to you in a half hour or so.
Sounds good.
Yeah,
See you.
I'm
I
not on my
just see
computer. I'm on my phone, so I can't really see.
Oh, see, I go. They have a fixed income page on Fidelity, and you can go and Tuesdays
Oh,
and
I have
Thursdays.
I have TD Ameritrade.
And
They
they
have
should
really
have the same
small.
thing. But here's a 1 month Treasury bill.
Oh, you can buy
Closes
them
on
through your brokerage thing?
through brokerage. And
Oh,
it's
okay.
5.32%, or you can go, this is a 2 month or 3 month, 11, it expires in November for 5.34.
Oh, okay.
Or
So
if you
you
want to
just
go all the way to February, you can go almost 5.5%.
so you just buy it through your brokerage account.
I do, yeah. And I'm sure Ameritrade has the same thing. They got to compete with Fidelity.
Yeah, well, Schwab bought them out, and they're supposed to transfer. I'm supposed to be upgrading TD, Thinkorswim, but I don't have the stinking thing. They tell me I'm supposed to upgrade. I don't have the little thing in the corner. I have to
Yeah.
call them because they're gonna. I don't know if I need to uninstall it and put it back on. You know what I mean?
Yeah, they should have
They're
tech
gonna.
support issues.
I'm not gonna be able to trade after next Friday. So they're
I
doing
would
something.
I
I'm
would
gonna
call
have to
tech
call
support
them.
and have them, call them and call tech support.
Yeah.
They're usually pretty good.
Yeah.
At least when I was at Ameritrade, they were good.
Yeah, well, Schwab bought them out, so now they
Yeah, I
swap.
know. That's unfortunate. But anyway, guys, that's all I have. If you guys have a good weekend, you have any questions or anything, Mike?
No.
Are you doing okay, Mike? Are you
Yep. I'm good.
good? Good. Appreciate you guys showing up and participating. And Barbara, it's nice to have you on.
Yeah, I just joined. That the weirdness about getting yours attached to the premium one, overcharging me. That he fixed it.
Right. Barbara, this is Drew. I'm the guy that we talked back and forth, and I just
Oh, okay.
refunded you that $60 back. So you
Yeah,
will get that back in like 2-3 days. So don't worry about that.
I never saw that in there.
Yeah,
You
yeah, we
know,
would never
I
double charge.
don't know if I want to get the QQQ thing. I just got charged for that too. I don't know if I really want that with all this other stuff. That's a Trent?
That's Trent. Yeah.
Yes.
Yeah, because I was with a group with the Alaskan IBD group, and they do a lot of TQQQ in a swing trading.
Yeah.
You know what I mean? That they're looking into doing back testing and all this stuff to see. You know, I mean, you could just focus on that and SQQQ, and
Yeah, you could if you have
have you ever
the
done that
time,
before?
you can move back and forth. Yeah.
Yeah.
Yep. And it just
We also
it takes time, and I would write up some trading rules on how you're going to do it, and then modify them based on
Yeah, that's
your
what they
experience.
they have that.
Yeah.
They're working on that. Of
We
course, in
have ours.
Alaska, I guess they're not having meetings right now because it's, what is it, light all the time or dark all the time? Or I can't remember.
Probably light.
They're
Yeah.
opposite.
You can look in the Discord for Platinum and find our trading guidelines there.
Oh,
Right,
okay.
Drew? So they're there and all documented, and print them out and take a look at them.
Yeah.
It'll make a lot more sense of what we're talking about when you see the trading guidelines.
Do you ever trade like the leverage ETFs?
Once in a while.
Oh, okay.
But you can get in trouble with those. Those are only made for like day trades. If you leave them in too long, you can really get messed up if you get on the wrong side of those, because
Yeah.
they go up, they go down 3 times too.
Oh, right, yeah. There's also a Tesla bull
Yeah.
one. Did you know that?
Yeah,
TSL?
Tesla, Apple, Microsoft, they all have them.
Well, I heard somebody on YouTube, but I couldn't find this to trade it. There was an ETF on covered calls on Tesla.
Drew, do you know anything about that?
But when I tried to find it in my brokerage thing, it did no such symbol. I don't know if it's Canada only or something.
I haven't heard.
I haven't either.
Yeah, there was an Apple one too. You know, where it's just one stock and the fund does covered calls and you get dividends on the thing, you know.
Well, I know JP Morgan has one, JEPI and JPQ. They
Oh,
do.
yeah,
I think they do covered calls on the S&P and the Nasdaq. And
Yeah,
they give
I
out.
had those before. Yeah.
Yeah, they have monthly dividends.
Yeah. Okay, I'll let you go.
All right. Well, if anyone has any more questions, you can always get on the Discord and under stock or a stock list or whatever, and shoot us a stock, and we'll take a look at them and try to analyze them and get them back to you and let us know.
Okay.
So everyone have a good weekend. Hope it cools down a little bit down in Louisiana there for you, Mike. It's not going to here.
Where are you at?
I'm in Nebraska.
Oh, I'm in California.
Oh, we're in California.
Sacramento.
Okay, Drew's in LA.
Yeah,
I used to live in Santa Barbara.
Weird storm coming in down south this weekend or something from Hillary or something.
Yeah, I heard about the hurricane coming, but hopefully it will fade away.
Yeah, I know.
Or I will not show up on the next Zoom call, I guess.
Yeah, you better be there.
Right. Okay.
All right, you guys all have a good weekend, and we'll talk to you next week, and we'll see what we can come up with on the list for next week. But I'm not hopeful we're going to have any watch list candidates, but we'll have a whole lot of dumpsters and maybe some under the 200s, but
Well, what do you
I
think
think
about that Hawaiian Electric?
about the what?
Hawaiian Electric,
Oh, what's the symbol?
HE. My brother lost a lot of money on that because they are blaming them for the Maui fire.
Well, yeah, that thing dropped pretty good.
He lost a bunch of money. He's so upset. He
Yeah.
doesn't have that much money.
Well,
He
that's
kept
see,
he
that's
kept
a
it for years, and
that's
I said, "Why don't you get out?" You know what I mean? Oh, pay the dividend.
yeah, that I'll just put it up real quick so you guys can see what happened. And these are things that, again, market conditions that you don't know anything about until they happen, and then they can really come in and screw you. Of course, here
They're
is
kind of
earnings.
like,
So,
like PG&E, when the fire's over here.
so let's say we were in this, from the trading guideline rules, here's earnings, which earnings dropped, and we would have been out here, and so we would have saved all this here. Yeah, but this here, I mean, this is just they're due to distribution too, plus the Hawaiian issue that's going on. So yeah, that's bad. But maybe we'll throw that on the dumpster list and wait and see if it comes back.
Yeah, that's what I was wondering, Well, another guy on YouTube was saying that when it gets down to 12 or below, might be a double if you get in. I don't know.
Well, it's already
Yeah.
at 12 or below. Well, 13, but where is it at?
Yeah, it went up a little today, I think, didn't it?
Yeah, but we'll see. Until these lines cross down here, get back to normal, I wouldn't be doing anything. So, all right. So, guys, gals, and we'll take off and we'll see you next week. Thank you for being here. We really appreciate it.